We will take a look to the east. Creating the first Japanese stablecoin will be the topic of our next keynote, held by Ken Nakamura from GMO Internet and Neil Chopra from Fireblocks. Enjoy.
Great, thank you. Thank you very much, JC, and good morning from New York from my end. I'm Neil Chopra. I'm on the business solutions team here at Fireblocks, where we are delivering secure digital asset wallet infrastructure and transfer network to financial institutions to enable them to create digital asset products and services to bring to market. And in that vein, I'm here with Ken Nakamura as part of the GMO team, where they worked on a tokenization use case through Fireblocks for both a USD as well as the first Japanese yen stablecoin. And so that's what this session will be on, talking through the background, the context of GMO, what they were looking to do, deliver to market, as well as why, and then what the process was to enable that. So I'd like to allow Ken to do a quick intro here, and then I think we can dive right into the topic.
Hello, everyone. My name is Ken Nakamura. I'm the CEO of GMO Trust Company, which is a New York Department of Financial Services regulated entity. As Neil mentioned, we're the JPY stablecoin.
Great. Really your time, Ken. And I think the topic of stable coins has been very prevalent, I think, throughout the conference, as well as over the past year or so. Obviously, a number of them that are out there in the market, getting a lot of attention. I think a lot of adoption as well, because I think folks from individual retail consumers to banks, as well as everything in between, are really seeing the value in leveraging stable coins for payments, transactions, as well as a store of value. And so my first question is really around some of the existing USD stable coins and why the GMO team chose to go down the path of tokenizing and creating a GMO-specific token.
Yeah, so I think the stablecoin is in general getting a lot of traction. I think it passed about 100 billion. It passed about how much was it? Like 100 trillion. 100 billion US dollars in market cap. So we see stablecoin as being a form of payment in the future. So at GMO Internet Group, we have our own crypto exchange that's servicing the Japanese residents. We have the Bitcoin mining operations that's operating in Texas, and we now have the stablecoin project that's out of New York. And the genesis of our stablecoin project has always been about how do we cut the cost for transactions? Like even internally, we have about 100 companies across the globe, and about 30 or more than 30 of them reside outside of Japan. So we do a lot of international wires, and we also have the largest payment gateway that's operating in Japan. So our thought process here was that we wanted to sort of work our asset into our payment gateway. So that people can, make payments on an e-commerce platform or at a merchant, etc. And then, furthermore, the international remittance is going to be the key for people to really, make payments between businesses. And we've always thought that it's going to be a big market. And right now, I think it's mostly used for trading purposes. But down the road, I think, instead of people spending Bitcoin, I think there's going to be more and more people making payments in stable coins.
Great. Completely agree. I think with everything that you had mentioned there. And I know payments is a huge topic, especially within the stablecoin space. And you had referenced that a couple of times. Where or which specific, I'd say, customer segments do you envision seeing the initial adopters of this? Is this really going to be used more for internal liquidity purposes, or is it going to be initiated or leveraged for direct-to-consumer products and services in the short term?
Yeah, I think, direct-to-consumer would be more of a medium-term use cases, but I think in near term, it's obviously being used for trading. And, when I say trading, a lot of market makers, liquidity providers, they transact behind the scene. They transact millions of dollars on a daily basis, right? So and they need a quick way to rebalance their crypto holdings in order to execute on trading. So that has to be super efficient and fast, and from a cost perspective, has to make sense economically as well. But I think down the road, the first use case would probably be implementation into credit cards, like how you guys saw with Visa card using USDC in the back end for settlements. I think there's going to be more and more stable coins that are backed by different currencies. And, for companies like Visa and MasterCard to have multiple options in different currencies to settle in the back end, that's going to be a key driver. And then, down the road, it's going to be distributed to the consumer level.
Great insight, and love to see real use cases getting put to work, especially in the stablecoin space. And one question, I think maybe shifting a little more towards the technical side of things, and not to get overly technical here, but obviously there's a number of different blockchain protocols that can be leveraged to enable stablecoin and really any tokenization use case. Can you just maybe provide a quick, maybe 1 or 2 points in terms of what blockchain protocol you did leverage and what the rationale or thought process was behind that?
Yeah, so our tokens are both ERC20s. This is by far the most popular way to tokenize any asset. Ethereum has been around for many years, and they built a very robust ecosystem. And it's a lot of times it's easier for exchanges, wallet providers, all the vendors to integrate the ERC20 tokens into their technology. So that it was a no-brainer for us to just go with Ethereum first. But as you see, network congestions, the gas fee are rising because of the popularity. And I think it's becoming more clear that a lot of companies are taking a multi-chain approach where they would just tokenize on different blockchains and enabling a seamless swap between those different blockchains. So we're closely looking at that as well.
Great. And I know we'll sort of pivot to the more specific topics around yen, because I do think that is a really, really interesting use case, and start to talk about maybe some of the regulatory considerations and discussions that were had around it. But you had mentioned there just exploring multi-chain and alternative options for the protocols, and obviously being able to leverage the Fireblocks platform to be able to really automate the minting and burning process. Really, what from an integration perspective, an onboarding perspective, to really be able to enable this through the ERC20 tokens, and maybe just talk a little bit about what that lift was internally to get your systems integrated into that Fireblocks platform to be able to automate this process.
Yeah, so we initially thought about just doing it manually. So we have built our own security room where, when there's a minting demand or purchase demand on stablecoins, we would just mint the tokens manually from that security room, which is robust, But however, we thought that everything needed to be automated, given the tractions that the stablecoin is getting, and there's multiple transaction minting and redemption activities going on between the market makers, rebalancing their assets, etc. So for us, there were no vendors around who can automate all of these processes. And most importantly, automating the workflow is super important too, right? Because, when let's say you mint $50 million worth of tokens, there has to be a workflow around it where, there's a submitter, there's the approver, there's a multi-level approval processes that needs to be involved. And, managing that is pretty cumbersome as well. So for us, Fireblocks, I worked closely directly with your CTO, Idan, and he was very helpful. Fireblocks just turned it around very super quickly for us. They just built the automated minting technology for us. That was probably 3 to 4 weeks for us to really get started with Fireblocks. So yeah, it's been a quite quick process for us.
Great, and certainly looking forward to seeing the team start to scale and leverage other use cases, which I think we'll get to in a couple of minutes as well. But maybe shifting from the technical side more to the business end of the enablement of the stable coins, and specifically on the yen piece. What were some of the risk and compliance considerations through your internal discussions to be able to enable this use case? And then also kind of tying that into potential discussions with regulators to ensure that from their perspective, this was a compliant stablecoin use case.
Yeah, so the biggest piece would be obviously the cybersecurity piece, because it's a programmable money that's on top of that's running on top of the internet, right? But we're an internet company. We've been around for over 25 years. We know ins and outs of the cybersecurity. Of course, it's not easy. But for us, biggest lift was being compliant with anti-money laundering regulations. So being compliant with the sanctions, OFAC regulation, transaction monitoring, travel rules, etc. That was the biggest lift, and that's the focus that most of the regulators have, right? That's the biggest focus, and they ask you tough questions, but they ask the right questions, right? So we spent a lot of time navigating through that. And for us, it was very important to go out of the gate being regulated because the market is shifting more and more towards robust regulation, and then just starting off not being compliant and just being having to backtrack and be compliant. That's going to be a much more bigger lift for anyone. So we just wanted to get it right from the beginning, and I think we're in a good position right now.
That's great to hear, and I think being sort of the leaders in this space gives you that leg up, of course. But I would say that a lot of the discussions that I have in my role at Fireblocks with banks and fintechs is questions, and I don't want to call them concerns, but just curiosity around what regulators do think about whether it's just crypto in general, stablecoin use cases. If you could maybe call out a couple of the key items or topics of discussion that you had with the regulators and sort of how you alleviated maybe some of their concerns, obviously knowing that this is a newer technology and a new way to transact and manage money or value would be, I think, great to share some of those thoughts with the audience.
Yeah, can't get into too much detail, but the focus has always been the transaction monitoring piece. So working closely with vendors like Chainalysis, having visibility into all of the token activities and how they're being used, and understanding that, being able to represent that to the regulator that we are tracking those, and whenever there's like a SAR filing event, suspicious activity report filing event, we have to be able to capture that immediately and file SARs. And giving the regulators the operational procedures and how we're doing that is probably one of the most important things that you should communicate with the regulator. And we spent a lot of time there.
Great. Appreciate that insight. Just in terms of sort of the scaling and leveraging of the stablecoin use case, you had talked about what the plans are for that. Are there any other assets that the GMO team is looking to tokenize once you kind of get the stablecoin use case off the ground, see the operational value and what you're able to deliver to customers?
Yeah, so we are getting a lot of inquiries from companies that are looking to tokenize, for example, gold, emerald, etc. And we are looking into those options as well. There definitely is a need to tokenize pretty much everything out there in the world, and there's there's all the opportunities out there for you. But for us, just getting this Japanese yen stablecoin and the US dollar stablecoin, getting it right, having enough liquidity in the market is the main focus right now. But we are a technology company at heart, and we do want to service companies that are looking for technology providers to tokenize their own asset. I hear a lot of companies looking into the option of just doing it on their own, but especially an asset-backed stablecoin, there's a lot of operational. You're going to need a financial grade operational policies and procedures, and managing that is not as easy as you think. So working, being able to provide those solutions for the customers is important for us, and we are actively looking into those options.
No, that's great, because obviously having a platform and a technology is key, but then having the operational procedures, mitigating those risks and having controls in place is just as important as the technology. So I completely agree and understand where you're going with that. And I think on that note, what would you provide maybe the audience for a couple of key takeaways or best practices for anyone looking to tokenize a currency, a stable coin, or any other asset-backed security?
Yeah, first of all, just don't avoid the regulator. I know it takes time and money, but starting with in a compliant manner is the most important part of running a business. You're basically custodying customers' assets, like whether it's a fiat currency or a gold or commodity equities, etc. You are liable for managing those in a right manner. So just don't be afraid to go to the regulator, ask them what the regulatory regimes are, what kind of guidance are out there, and just checking all the boxes before you get started is the most important piece. Just don't spend a lot of time there.
Great. Thank you very much, Ken. I thought that was very insightful, very interesting to hear sort of the process behind what goes into stablecoin creation and tokenization of assets. So again, appreciate your time. I hope the audience, and I'm sure the audience did as well. Hope everyone has a great rest of the conference. Ken, any last words for anyone?
No, I enjoyed the conversation, and thanks for having me again.
Great. Thank you. Back to you, JC.
Great job, Neil. Great job, Ken. Thank you very much for sharing your insight in this case study.